All right, hope everyone's doing well. So my goal is to start making more videos in the morning. At least maybe try to do kind of a quick pre-market kind of video and just a few little tidbits on trading, if you will. So before we look at some markets, I want to discuss a few things. Number one is, let me put it this way. I want to discuss what are the 3 reasons most people fail at trading. I don't mean fail in terms of in a month. I mean just fail in one day making a career out of trading. The first reason is obvious. They don't know what they're doing, and that is due to a lack of the correct information. And if you know Al Brooks, if you have Al Brooks material, then the reality is you have the right information. So assuming you have Al's videos, assuming Al Brooks, he's in the bottom of the description of these videos. He always is. I give links. So assuming you have his information, what's the next reason? The next reason is not consistently studying and not consistently trading. Preferably you need to study more than you trade. And by studying, watching the videos, watching Al's trading room. Again, you can go to brookspriceaction.com or brookstradingcourse.com. Both of those videos are in the links below. So yeah, the first one is wrong information. The second one is lack of studying and lack of trading. And really the third one kind of goes into 2 pieces. And that is they trade an instrument or a market that they have no business trading. Now what do I mean by that? I mean that they cannot handle the risk associated with that market. In other words, every market trades the same. I would never trade penny stocks just because I think it's, you want to trade a market that's heavily traded. And the reason, think of anything major. Anything you hear about in the news on a day-to-day basis is a fantastic market to trade because you have institutions trading that market. In other words, look at the volume. Now, this is all in Al's videos, so I'm not going to go too far in this. But the reality is Goldman Sachs is trying to take money from JP Morgan. JP Morgan's trying to take money from Merrill Lynch. And anybody that's trading with them is irrelevant in the eyes of JP Morgan and all the institutions. Sorry, I had to pause the video, so let me rephrase what I was saying real quick, because I honestly can't remember what part I was on. So first and foremost, you got to study. Just bottom line, you got to study and you got to trade. Second, you really, and that goes hand in hand with the first. The first and second, you got to get the right information, such as Al Brooks. And what I can promise you about that is if you're questioning Al, if you're questioning the trading room, my advice is to join the trading room. One of the best things that helped me believe in Al is I was in his trading room for 3 years probably. I don't know how long I don't know how many days I've watched Al's trading rooms, but it's easily in the hundreds. 500 days. I have no idea. And what I eventually learned was, hey, once I started figuring out his lingo and how he was describing things, I would listen to a day, I'd listen to the morning, and all of a sudden I'd be like, yeah, what he's saying is happening. I would watch Al say, and it's just an example, I don't know if he actually said this, but we may get a bear breakout here. And then all of a sudden we get a bear breakout, and I'd say, hey, wait a minute. Or this is consecutive sell climaxes. It's 50% chance we get a second leg, but then we'll test up here. And then we test it up here. And I was thinking, hey, he knows what he's talking about. So And that's another thing. If you're going to join the trading room, commit to at least 6 months. Because most people, I've done this and watched Al for long enough to realize most people join the trading room for 1 month and they don't even give themselves the chance to learn the way Al trades, the way he talks. So, again, first one, get the right information down. Number 2 is you got to study. You have to trade. Number 3, you've got to trade something that is reasonable for your situation to trade. Number 1, for example, most people should not trade the E-mini. It's too much risk. Most people have no business risking $300 to $400 on a trade. The problem with, and that's just for one contract. At least for one, I think Forex is in a fantastic way because you can reduce your position down to $1. So you can easily scale your risk. And another thing is, let's face it, most people do not have the luxury to quit their job and just trade and learn how to trade. That's just, for most people, it's not feasible. And, Forex, again, you can trade hourly charts. I'm the more I trade Forex, the more I begin to enjoy trading an hourly chart. Sure, there's less trade, but I find it more consistent. And then really the last little tidbit I'll say today is you have to be persistent. Al did a kind of webinar podcast thing with somebody. You can find it in Al's in brookstradingcourse.com. It's up there. It's free. And one of the questions he was asked, and maybe it was the course that Richard made. For those of you on the website that have been there long enough, you know who I'm referring to. Richard is the one that created the actual sorry about that. Richard was the one that created the actual helped record the actual trading course or edit the recordings. Anyways, one of the things that someone asked Al was, Al, what's the most important characteristic to become a trader? What's the most important personality trait? And Al answered it like this: it's persistence. You have to be persistent in what you're doing, and you're going to make 1,001 mistakes. The trick is, can you learn from the mistakes? So, what the mindset to get into is, every time you make a mistake, you should get to the point where you're saying, okay, why did I make it? What did I learn from it? The quicker you can get to that point, the faster you're going to progress. And as always, you can ask me questions. I'm certainly not Al by any means, but I do certainly believe I'm beginning to understand Al's information and videos more and more every day. So let's talk about a few things real quick. So first and foremost, on the E-mini, we gapped up, or the SPY, same thing. And that's another thing. My recommendation, trade the SPY if you can, but you need $25,000 in order to day trade because of the pattern day trader rule, at least in the US, or trade Forex. I would personally lean towards Forex just because for most people, they will just have an easier time with, if they're working somewhere doing all this, trading higher time frames on Forex. Anyways, so we had a gap up off yesterday's close. Give you a little preview of yesterday. You don't need to see all of yesterday, but just for fun, here's yesterday's high. We gapped up. So the first thing you have to think about is, okay, gap up. 50% chance we go sideways to the moving average. if we're going to have a trend, there's a higher probability of a bull trend. However, realistically, there's a 25% chance we get a bull trend, 25% chance we get a bear trend, although the odds are slightly better that whenever you gap up, you'll get a with trend. You'll trend in the direction of the gap. So if you gap up, you'll trend up. If you gap down, you'll trend down. So anyways, most importantly, we gapped up. We know there's over a 50% chance we're going to test the moving average. So what does that tell you? Do you really want to buy at 835? No. Another thing you got to think about is, okay, we're gapping up, look to the left. There's a channel. Therefore, we don't know, is this a top? You know, we have a one push down, a second push down. Who knows? Maybe top of the channel is somewhere up here. So you got to think over here, we're pretty close to that top of the channel. Also, only just a few things. 80% chance, but bar one will not be an extreme. Therefore, 80% chance you will not have a trend from the open. All of this is in Al's videos. Reasonable stop entry short below bar 4. Stop above. Sorry about that. This bar didn't trigger. Then you're getting consecutive bear bars with the moving average. Probably going a little bit lower, strong enough. Probably always in short and strong enough for second leg down. May test the low close, may test down here. So you can see though, this breakout's not very strong. It's rather weak. Starting to stall, but again, first up should fail. And then you get this. Well, think about the logic. You have a high one buy and then a second entry buy. But you have the second entry buy in a bear trend. It's clearly always in short. These are not strong buys. There's a lot of risk, very low probability. Therefore, if a bear gets out of this high above this bar or this bar, they've got to get short below this bar. Strong breakout, probably strong enough for a second leg. You have to be open to the possibility. You know, the odds favor exhaustion right here. However, this is a strong enough bear bar, and this tail is weak enough that the odds favor a second leg down. So you have to be open to the possibility that this is a measuring gap. Turns out it was, but we don't know this at this time. Then you get a breakout. Then you get another breakout bar. Okay, so is this exhaustion? Maybe. It probably is. We'll probably close this gap. Wait a minute. Why we get a bear bar? You've got to be thinking this may be a reasonable measuring gap. And we just get 3 consecutive bear bars. So we're getting follow through from this gap. Probably a measuring gap. Sideways, breaking out lower, and look what happened. So now, you know, you can argue consecutive sell climaxes here, 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 here. Soon we'll probably get 10 bars, 2 legs. Over here, probably at least going to test the moving average. We haven't touched it in many bars. We're also below yesterday's lows. Probably won't stay there all day. So you got to think, I'll make this line blue, but we will probably close the gap. And there you go. So probably forming a trading range, testing the moving average, but again, first up may fail, probably will fail, and we'll need to go sideways for 20 bars or so to form a major trend reversal. Therefore, this is a scalp. Low and short at the moving average, but strong enough consecutive bull bars. Probably a trading range for the bears at least for the next few bars. So not a great sell. Maybe okay for a scalp, but probably not great for a swing, because you'll probably get a second entry and at least a minor higher low. Strong bear bar, 3 consecutive bear bars, big up, big down. Again, probably sideways, probably buyers not far below. There you go. So again, bears maybe sell here or they sell in here. Really no reason to get out. If they did, they get short again. And then I would certainly get out above these bars just because you're so far from the moving average, you're probably going to test back to it. And, I would not get short again here. Bears that were short probably get out above this bull bar. Now, minor lower high, so even if we go above it, probably sellers, which there were. But again, we're starting to form a trading range. And we're having a difficult time holding below this low. Makes me think that we're going to go somewhere up here at some point. And then again, so we tried to close below this low during here. We're trying again, so we're 3 pushes down, but again, all probably minor. Sideways for a lot of bars. Starting to form a trading range, but just fairly tight. No good stop entries for the bulls yet. Okay. Now, best looking bear bar in the entire day. Notice this. Look how big this bear bar is compared to everything. Here. Look at the body. By far the biggest body we've had all day. Probably, ask yourself, is this going to be, we had a measuring gap in hindsight from this low to these highs going down. Or is this bar going to be another measuring gap? Or are we going to gap down and break below these lows and fall all the way down here? Probably not. Now, depending on the next bar, there's a 50-50 chance we have a second leg down. But the second leg could be similar to this. We had a strong enough bear bar, weak enough stop entry buy. We got a second leg, but then we got follow through. We'll probably get the opposite of this. Maybe a second leg, bad follow through. Bad follow through, probably going up here. We got a second leg, stop entry buy. So this is a very credible, as I just said, that happens a lot. You get what's probably exhaustion. It's strong enough for a little bit down, and then we get this. And by the way, there's 2 things to point out with that. There's a higher probability here that this will be exhaustion for a few reasons. Number one, this is a credible buy. These are credible buys. And, 90% of the time you can make money if you do something reasonable. So what does that mean? Well, if I buy here and risk 20 points in the E-mini or $2 in this buy. Now I know these bars are really big. So again, take that with a grain of salt. Maybe it's $4. That this varies depending on the day. But all I'm saying is if you buy here, use a wide enough stop and you buy more lower, typically you can break even at a minimum. So I buy here, maybe I buy more above this bar. There you go, break even. And look what happened right here. Price came almost all the way up. So anyways, same thing right here. If you're aware of what's going on, this is a very credible buy, especially if one common approach is you put your protective stop somewhere in this area, measured move down in this bar. So you buy here and maybe you buy more lower and you can get out break even. Now, what I think an interesting way to go about that is don't buy here, buy this close or above this bar, knowing price will at least get to here. Now, personally, if I bought above this bar, I'm not going to exit above here or here for a few reasons. We haven't had a close above the moving average except for this bar, but I'm going to ignore that. We haven't really had a decent close above the moving average. And I still think this day is so climactic, consecutive sell climaxes here, 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 here. We're going to get 10 bars, 2 legs. So what does that mean? Maybe a 50% pullback from this high to this low. So maybe somewhere up here by the end of the day. And again, I'm not convinced. I think we're going to, you got to think, what could the Bears do? What could the Bulls do to make this day disappointing? Well, they could close it at the midpoint. And coincidentally, look at the low of yesterday. It's around the midpoint. So I think we're going to close somewhere up here. So anyways, reasonable stop entry buy, decent follow through. Another big bar. Now, tight enough channel. This is tight enough, this whole thing, that the first reversal up should be minor. And look, that's a little sign of disappointment. So it may have to pull back. Another sign of disappointment. Let me go and get rid of this. Probably going to form at least higher low. Here, we have a high one buy. Now, we could easily form a new low. What time is it? It's about 1 o'clock. We could easily form a new low and test lower. And instead, we formed a second entry buy and tested up. So let's talk about this real quick. This happens a lot. Whenever you get a breakout, such as here, and this one's not fairly, this isn't a very strong breakout. However, you have to think about it in two ways. We are so climactic on the day that the bulls don't really need as strong as a breakout as they normally would. So let me go over here because I want to kind of explain something real quick. Whenever you get a breakout, there's a 60% chance at a minimum you will get a second leg. Now, what you never know is, will the second leg go sideways? Will you get a second leg based upon a measured, will you get a measured move down on the bars, which clearly what we got, or will you get something different? So in other words, see if I can just find one. Be easier, just kind of. Had some great movement recently. Here we go. This is a good example. So we had a breakout, but within yesterday's range, sold off, and then retested the highs, forming a trading range. You never know which one you'll get. But the smaller the pullback from the breakout, the higher the probability you'll get a measured move down. So same thing over here. We had a very weak pullback. When you think about it, bulls will try to reverse the market once. They'll try again, but they won't. If they fail twice, traders will exit. Counters and traders will exit. Same thing here. Bears will try to reverse once, try to reverse twice, but if we form a second entry, they'll exit. By the way, top of the channel, another reason I think we'll get here. And we did. So look at that. You're saying, what happened to the strong bears? Well, strong bears weren't as strong as they appeared to be. So, let me just point a few things out in the Forex markets. Tight channel in the euro-dollar 60-minute chart. Channeling up. Sold off now. Reasonable stop entry buy, betting on a double bottom. I think we'll get up to these highs. I think it's reasonable. But there's the risk of a, kind of like if I said, a bull will buy here, and if the bears get a deep pullback and a second entry short, they'll exit. So, maybe, kind of like this. If they bought down here, had a pullback, second leg up, they'll exit right here. Dollar yen, strong enough breakout for at least a second leg. We've had a second leg. We're starting to go sideways. I think we'll test back up in this range. However, I don't know when. Canadian dollar, just a mess. Tight trading range, limit orders. Dollar franc, been in a sort of a broad bear channel. Lower highs, lower lows, maybe here, here, here. Either way, bulls will probably buy a new low. Bears will buy back shorts. Great British pound. It's that possible second leg trap, but fairly strong. So I'd be a little suspicious that this may lead to more down. Incredible stop entry short here. Deep pullback, strong second leg. But my concern with the second leg trap is, sure, in hindsight, It's clearly 3 pushes down. 1, 2, 3. So I could easily draw a channel. You have to remember, most channels, or better yet, most trends transition. So we were still in a bull, we sold off, still in a bull trend, but possibly in a bear trend. So, sure, we are at support. But my problem again is this is so strong that the bears, realistically, the bulls need to go sideways, at least form a second entry. So, my preference, we rally up to here, sell off to a new low, and form another stop entry. I would be much more willing to buy if that was the case, but that's my concern. So my concern is, we're going to retest these lows. New Zealand, fairly tight channel. We're getting gaps. So there you go. We're at one target. But again, tight channel. What does this look like on a 120-minute chart or a 120-minute chart? Pretty tight. 240-minute chart, even tighter. Aussie dollar. I actually made a mistake. So I sold during this breakout, betting we would close this gap, and it was kind of stupid what it did. I ended up tightening my stop to above this bar, betting we would close, betting this is exhaustion. We've been rallying up consecutive buy climaxes, best looking bull bar in many bars, probably going lower, and I think we'll get down here. And what I messed up on was, what I just said with the SPY. Let me go back to it. Strong enough bear bar, odds favor second leg. Well, same thing with the Aussie dollar. Strong enough bull bar, odds favor second leg. So I got stopped out above here. I should have used the wide stop. Again, what's wide stop? Well, an obvious one is always a measured move of the body. I still think we'll get down here, at some point, for a few reasons. We have a reasonable stop entry short, and as I said with the SPY, whenever you have a reasonable stop entry short in what's probably a trading range, you usually test it. So traders that sell here, scale in higher, probably get out break even. Well, let's think about that. If I sell here, sell more on this close, I got out at break even. If I sell more below here, got out at break even. And we close the gap. So I think we'll go sideways to down and ultimately get down to here. Can you sell here, put your stop up here, betting we'll get down here? You probably can, but I don't know. I don't know if I would do that. I would rather have sell up here or use a wide stop. All right, that's all the time I have. Hope everyone has a good day and hope you enjoyed the video. Comment below if you have any questions or message me in the Brooks Price Action website. Thanks. Bye.